Thank you, everybody. Dan, thank you so much for coming.
Thank you for having me.
So when I asked Dan to come on this for us, I basically said, we'd like you to come basically do a victory lap, because I don't think there's any firm that's invested more money and more energy in kind of being fully regulated onshore and in the market and of the market than Coinbase. And I think if you look at their quarterly numbers, I think pretty good.
Okay.
Maybe better than pretty good. I will confess to a conflict of interest, as my husband's law firm also represents Coinbase. But I thought today I would ask Dan a bunch of really, really challenging, awkward questions around Coinbase, the European markets, MiCA, and all of that stuff. And we even sourced questions from Reddit. So boxers or briefs, I'm just kidding. This is from the Ethereum Finance Forum. So they are much more serious and thoughtful questions. Maybe before we get too deep into the heavy duty stuff, Dan, just tell us a little bit, like you joined Coinbase a couple of years ago. You've seen the very top of the kind of biggest crypto market so far. You've seen the bottom. Tell us kind of what's evolved, what's changed in the industry over that time.
Yeah, Paul, thank you. And first of all, thank you for having me. It's a great pleasure. I'm still thinking in the back of my mind about the outrageous announcement to the press that I'm going to make today. But while that has happened, yeah, it's certainly been quite a change, right? I think I started, probably this is type of thing that you will never forget. I started 2 weeks before FTX happened, and then got a lot of concerned phone calls from friends and family of, had I known what I was getting myself into. And it's certainly, I would say, over the course of these almost 2 years, certainly the industry has matured a lot. I think the industry has developed a lot. I think also one important factor, and you've been speaking about this earlier today, is we're seeing more and more institutional adoption. So I think, if maybe in the 2016-17 timeframe we were like everybody getting excited about institutions coming and institutional adoption, at the time it was more about they're coming. Nowadays it's more about they're here, right? And so I think, in certain surveys you find numbers like 3 out of 4 financial institutions sort of stating they're going to buy any form of digital assets. More than 52% of all Fortune 500 CEOs saying they're investing in blockchain activity. So I think, you can pull a number of these stats, but I think all of them sort of showing the same direction of the financial institution adoptions. And then the last thing I would say, and it almost like today and yesterday, it kind of almost feels like this is sort of so far back, but we've just 30 days ago, we had a new Bitcoin all-time high. So I think, it's kind of easy to forget this, but I think, it's come a massive way from 2 years ago.
So what did you tell, just out of curiosity for the record, and so I have something to store for my reference in the future, what did you tell your family when they asked if you were all right, and did you know what you were doing?
So I'm kind of lucky. My wife works in venture capital, so she's probably making more risky investments than I am.
Excellent. So you're head of Coinbase for the UK and Europe, but let's start in the UK and tell us kind of what you're seeing here in the UK market.
I think the UK market is still a fantastic place, fantastically attractive, right? I mean, incredible capital markets, incredible talent strength, globally respected financial regulators. And it is really just by no coincidence that you have probably the leading fintech ecosystem here in the UK. And I think, just yesterday, the city minister at Innovate Finance was making certain announcements and giving statements around crypto. And I think both the government and the regulator, the FCA, have been extremely thoughtful in how they regulate crypto activities and financial services in the UK. And it's really has sort of created this framework that gives companies like Coinbase the confidence to invest. And it's sort of these kind of investments. And for us, it's really a point of pride that the United Kingdom is our largest international market. So outside of the United States, UK, right, is the biggest market that we have. And it's the one that we intend to grow.
That's fantastic. So obviously, UK, good regulatory environment, constructive regulators. Let's talk about the European Union, and in particular, what other environments, the EU and other environments, are really kind of setting the benchmark or creating a constructive growth environment?
Yeah, very true. I think, And sort of, because you brought up MiCA, I mean, MiCA, we always have to remember, is a framework that the work sort of started on 2018. So, while it sort of always feels very recent, it's actually something that has come such a long way and such a difficult piece of legislation to pull off. If you think across like 27 member states, and you get all of them to agree on something that is so innovative and kind of nobody really knows which way or direction would be going. So then to come out with thoughtful regulation that kind of works in practice is a real big achievement. And I think sort of the moment that it was passed and introduced, we saw a lot of interest from other countries globally that were sort of looking to what the European Union had achieved and introduced or was about to introduce, sort of looking at that and saying, okay, what can we learn from that, right? And is there elements that we can maybe copy and that we can use in our jurisdictions as well? And I think nowadays, more than 16 out of the G20 have either passed or are about to pass crypto-specific legislation, right? So I think there's a whole trend or momentum towards global regulatory clarity when it comes to crypto assets that is really very is very heartening, and I think especially the European Union has been leading the way in this regard.
Did MiCA change like sort of the Coinbase view of like Europe? Did it make it a more attractive place to invest? Did it change kind of the strategic plan around Europe?
Definitely, and maybe this can be the statement I make to the press now. I mean, jokes aside, right? I think about 2 years ago, like when I started, there was like some of the press announcements we did at the time about like, a number of senior leaders being appointed to the region and sort of doubling down on investment in the region, and kind of like, I think, it's just this regulatory clarity and this security or safety that you know how the framework works, how the principles, what are the rules of the road, that you can start to invest, right? And this is what Coinbase did 2 years ago.
Now, obviously, so MiCA gets phased in over the next few years, right? Starts in June of this year. Where do you expect there might be evolution? Are there areas where you think, for example, DeFi or others, where it would be nice to see either further clarity or you think there might be some adjustment as real-world experience starts to accumulate?
Yeah, so I mean, what we've been speaking to is about kind of the level 1 directives, and then now the level 2 are being worked through. So we should have and that's much more sort of the technicalities of the regulation, and we should see these to be concluded by the end of the year. And then, as you mentioned, we have stablecoins coming live in the summertime, and then the rest sort of the wintertime. And I think, as with any piece of legislation, we'll see how that works in practice. And then I think, there may be a point in time in the future when we'll revisit, we'll see, we'll adjust. But I think that's, as far out. Let's first introduce it. Let's see how it works.
Has MiCA changed the competitive environment? So more competition, less competition, different competition?
Yeah, interesting. I would say, interestingly, I'm going to turn away from MiCA for 1 second. I'm going to turn more to UK with the financial promotions regime. I would say like that one definitely had an immediate impact or effect on the market structure here in the UK. If you sort of think more now towards MiCA, we might see that. I mean, it's difficult to tell right now, right? It's kind of a prediction, if you will. But it could come to pass that smaller players, that they might find it challenging to comply with the full set of the regulation. We'll see. That is certainly something that is important to watch because it's a very young, emergent, and nascent space, right? So you don't want to stifle innovation, right? You want to enable people to try, to build, and to see what works in practice. So I'll turn to one example. Maybe for the travel rule, the trust solution. The trust solution is kind of a collective of over 90 members globally now. That in the trust solution, we're kind of trying to bring together to offer a solution for the travel rule compliance that, you kind of just pay a small administrative fee, kind of just covers the cost, but everybody can take part of it. So I think it's very important that we kind of keep these possibilities for new players to participate in the industry and not sort of shut it out from the start.
I want to come back to something you just said earlier, which is the financial promotions regime. For those of us who don't know, what is it? Like, what impact did it have?
Yeah, so the financial promotions regime is a regime in the United Kingdom that regulates how you can make financial promotions. And at the start of it was actually 8th of October last year, and then sort of a second part of that started 8th of January this year. Crypto assets were scoped into that regime, right? So previously it had already been an existing regime, and then crypto assets got scoped in. And I think, it's just very prescriptive on what you can or what you can't do in the United Kingdom when you communicate to consumers. And in that regard, I think a number of players, and there had been some announcement in the press already about that, decided to then discontinue serving the UK market.
Okay, excellent. One of the things that I talked about in my keynote was this idea that today something like 70% of all trade in cryptocurrency is actually based in offshore markets, and but most of the capital that's accessible through regulation is actually kind of based onshore. It's in pension funds, it's in kind of sovereign wealth funds and other things like that. Is this going to change your customer base? Is this going to change the market dynamic? What do you think there will be any substantial changes as a result of this kind of regulation?
Yeah, also very, very interesting thought. So I would have quoted that statistic a little bit differently than you. like we always speak about 70, 80% of the crypto business sort of taking place internationally. So not necessarily offshore, right? I would sort of, Europe, etc. I would kind of include that in those numbers. But I would tend to agree, like my expectation or our expectation for the future, like coming with the regulation, is that likely consumers will more and more want to interact with trusted players that are regulated and that sort of are within the boundaries and within their markets and the regulations inside their markets. Because, it gives you things like legal recourse, it gives you a possibility, you kind of know what you get because of the regulation. And so we certainly see the future more in this kind of regulated business rather than this offshore business.
Okay, now because I think you have foot in both of these worlds. We talk a little bit about MiCA. We talk a little bit about the UK market. How do you compare the UK to the Eurozone? Does it matter that the UK doesn't have exactly the same regulatory regime? Are they close enough that kind of investments are reusable? How do you think about kind of the fact that the UK is going to be a little bit different from the rest of the Eurozone?
Yeah, so as I was saying before, I think the UK so far has a fantastic regulatory clarity and regime. I think it's interesting. You could almost see this. You can see this as a disadvantage, but I think you can also see this as an advantage for the United Kingdom, that they got a sort of second mover kind of effect, right? Because they can look at what has happened in Europe or kind of what legislation has been passed and what works, what doesn't work, and how they want to adopt it or not adopt it, right? So I think it's a fantastic place to be in.
So this is a question that's come from our online folks. Do you see there being a significant risk of regulatory fragmentation, right? Will MiCA kind of devolve into actually a bunch of more local specifics, or will kind of the European-wide passport rules make it really easy to have sort of some level of consistency and continuity across the region?
Well, first of all, I would be very optimistic about it, right? I think it's important to remember that MiCA is a regulation, so it kind of directly binding and applicable across all the member states. It's important to remember that all the level 1 rules, they're kind of exactly the same across all the markets. And then the level 2, I think there's very involved discussions, including EBA, including ESMA, sort of driving towards homogeneity across these markets. So I would certainly be more on the positive and optimistic side about it.
Excellent. Obviously, for Coinbase, growth is a big focus, and you're back into a growth mode. Tell us a little bit about kind of where you see the growth opportunities, where you see the kind of market opportunities in the near future.
Yeah, and I think that's back to what you said earlier, right? With this sort of 80% of the business is happening internationally. So obviously, we're an American company. We're proudly an American company, and sort of the majority of our business in the United States. But that, if you sort of turn it on its head, it actually presents a massive growth opportunity internationally.
Okay, and sort of where does Europe figure in that picture relative to the rest of the world?
It's so as I said, the UK is the largest market just directly after the United States, and then the next couple of markets are also European markets. So it's already quite sizable, and I think it's still with MiCA arriving, we can grow this even much further.
Excellent. One of the questions that came in from Reddit is when you think about laws, particularly outside of the U.S. what specific laws or rules do you think might be holding the market back that ideally, either a lack of clarity could be resolved or modest changes could lead to a much more kind of constructive outcome?
Yeah. So one that we're watching very, very closely and we're engaging on very, very strongly at the moment is stablecoins. Any kind of stablecoin regulation. Because I think we very much believe in the ability of the private sector to innovate or innovate faster. I think that's always something to keep in mind. And then B, some of already under MiCA, some of the provisions that we see for stablecoins, but then also being discussed in the United Kingdom with the Bank of England and the FCA, sort of the prohibition to pay interest on stablecoins, certain capital requirements for stablecoins. So there are a couple of elements that might give them, sort of privately built stablecoins might give them a disadvantage towards, for example, tokenized deposits or e-money. And I think, from our vantage point, it's kind of it's important to now allow innovation and growth. And I think, once you've sort of seen something that works in practice, something that's adopted, et cetera, I think then is the moment to regulate it.
So you brought up tokenized deposits, e-money. You didn't say it, but I think at the back of your mind also central bank digital currencies. Talk to us a little bit about where you see the landscape around CBDCs, tokenized deposits, e-money. Do these things happen in separate ecosystems? Are they run in parallel? Do we have CBDCs on public blockchains? Do you have any sense of how this might play out?
That is an excellent question. I would say that is one that is sort of still unsettled. I see a lot of discussion and very discussion in different countries even, right? On if you pick CBDCs, what should a CBDC even look like, right? Is it sort of more of a retail CBDC or is it more of a wholesale CBDC? And then a CBDC, again, very different discussion about but is that then done centrally by the central bank, or is it more the private sector, so let's say credit institutions that would be issuing tokenized deposits or e-money or that sort, and then you still have the private sector. So I think it's actually probably too early to call, and it's a sort of discussion that is still ongoing.
One of the things that I have always thought is a potentially very large challenge is when I talk to central banks, they're very nervous about the idea of a programmable central bank digital currency, like something that you can sort of write code around and can sort of make things do automatically. But then as a result, they don't really want to deploy their CBDCs on a public chain, because even though that's where they're most useful, potentially the most useful, that's where there's all this kind of stablecoin demand, they're worried about the potential of programmability, like people doing, if not necessarily bad, things that they would prefer not be done with their central bank digital currency.
Yeah, interesting. I mean, we also see quite the opposite, right? When you look at Singapore, for example, who have been experimenting exactly with smart contracts on public blockchains. So I think, it's still, as I was saying, it's still a range of opinions and approaches that we see out there. And I think it's very early or very difficult to tell which one will prevail.
Talk to me a little bit about stablecoins versus crypto assets versus tokenized digital assets. And in particular, what I mean is, it seems like our observation is there is a market for cryptocurrency, right? People want Bitcoin, for example. There's a market for stablecoins. It's not always clear, what is the market for stablecoins for? Is it just as a place that you park your money when it's not in crypto? Or is it for the purpose of plugging into, say, a DeFi service? And then particularly, maybe to follow on to that, which is institutions versus individuals, is their behavior quite different?
Yeah. I think, interestingly, we see massive opportunities especially when you say stablecoins, for payments-related use cases. So, I mean, there's certainly that use case that you just mentioned, sort of, hey, I'm not in any specific, Bitcoin, Ethereum, etc. So I'm just kind of parking my money in a stablecoin. But we more and more see payments-related use cases. And I think sort of from this vantage point of us sitting here in London, it's kind of easy to forget that there's so many countries out there where maybe you have much, much higher forms of inflation, or, sort of much, much less stable currencies, or maybe it's not as free or easily to move your money, right? Because you want to cross a border, but, there's no possibility to cross the border, right? You just can't take your money along, you would lose it, etc. So I think there's there's a ton of opportunity out there when you think about stablecoins that just goes far beyond the sort of initial crypto trading aspect.
But you can't access any of that opportunity, right? I mean, I think we experience the same thing at EY, right? We have to be scrupulously in compliance with the law. So if a country says you cannot buy stablecoins here, you cannot buy cryptocurrency here, we certainly could never audit a firm that would do that, and you probably couldn't do business there. That is a fair statement, right?
Well, I didn't necessarily mean this to be just only for Coinbase, right? Like here I was speaking about the broader industry, and I think the applicability of these kind of technologies in this sense, yeah.
Yeah, I do agree with you, by the way. Like, I do think sort of demand is often highest in countries that have very high inflation levels, for example. But in many of those countries, it's also, there's a lot of restrictions, sometimes a straight up ban on buying crypto assets, because for the same reason that there's often a ban on just exchanging your currency at a market exchange rate.
Yeah, all the more a reason to foster the adoption of the technology.
Right. So I've got one more question for you, which is, and then we're going to go to questions from the audience. Talk to me a little bit about the difference between individual buying behaviors versus like enterprises and institutions. So I think individuals are often, maybe they're buying meme coins or they're buying crypto. Enterprises, are they investing in it? Do they follow different investment patterns, or institutions? What are the differences between those objectives and entities?
Yeah, very clearly, I would say with financial institutions and then businesses perhaps also, right? I think financial institutions, you see much sort of this investing / savings character, maybe call it like that, right? With businesses, I think it sort of then starts to go into the payments character. So we see a lot of experimentation around, can I use stable coins to make international remittances, kind of international money transfers, make this much cheaper than it is today? Because we all have to remember, right? I think sort of with correspondent banking, it can take up to multiple days. And like I was recently trying to make a transfer from the United States to Germany, actually, in this case. It cost me $40, right, to send $100. Okay, it's a bit crazy, right? so I think, there's still like a ton of experimentation and a ton of things that we can do better in that space. And then obviously, yes, you go to the retail space and there it's sort of way more far-ranging, the types of activities that we see.
Fantastic. So I am going to now open it up to questions from the audience. We got somebody with a microphone, and we'll go ahead and start here with this gentleman in the front, and then we'll keep going.
Thank you very much. It was a very fascinating insight into Coinbase. The question that I need to actually ask is, how do you perceive the market to grow when you're going to be taking in ETFs and ETNs and other derivative products? Because the game's going to change dramatically.
Yeah, very, very interesting question, and thank you for the question. Obviously, we had the kind of the ETFs launch in the United States start of the year, and I would say, like, for anybody who doesn't know, Coinbase is the custodian for 8 of 11 of these, so it's actually quite involved business for us, right? And I think it goes back to this point that I was saying. It sort of opens up a new avenue for financial institutions to participate in this space. And I think, Paul, you mentioned this morning, right? I mean, it's not only financial institutions, like narrowly thinking, you would say banks, but, long-term, why not pension funds, right? Like, why not sort of asset managers and so forth, right? I think you can sort of immediately, in your mind, sort of have creativity or thoughts on how this could get much larger in the future.
This gentleman here, Adi, had a question, and then you.
Paul mentioned earlier DeFi. I'd be interested to know your view on maybe timeline or what needs to happen for DeFi to start being or coming in through the regulation.
Yeah, interesting question also. Thank you. Well, I think, I'd be careful not to regulate DeFi too early. Like I put it like that, because we just also have to remind ourselves it's a very, very small space at the moment, right? Like DeFi is not sort of a massive phenomenon, right? It's a small space. And I think it's like that's the moment when everybody is still sort of figuring out how it works, what to do, what are the use cases, what works best, what not, etc. Like sort of, quote unquote, in tech you would call it find product market fit, right? A bit like that. And I think it's just like while we're seeing this innovation happening, like I don't think we should be too early to sort of put it into clear boxes that we have known for a very long time, that we know exactly well how they work.
So we have another question here, but first I'm going to take advantage of my power, because I have the microphone, to ask you a bit of a follow-on question. So I've been expecting and predicting for years now, and completely wrong, by the way, that a major exchange or a big fintech firm would offer what I would call curated access to DeFi. So one of the things that I find as a user is kind of bewildering is there's a million things out there in the world of DeFi. And some of them kind of blow my mind. One of my friends was like, Paul, I can't believe I'm getting 30% return on my cash. I'm like, risk reward, that must be risky, right? But still, I want to know about it. I just want to know about it, right? And one of the things that surprised me is that no one has offered what I would call this like a curated window to say, listen, we've done the work of sorting through these bazillion DeFi options, and we have 3 deposit and 3 lending or 3 kind of collateralized lending options that we could recommend to you, right? And I'm just curious, like, is that something you've ever thought about? Are there regulatory reasons why no one has done it? Or should I immediately quit my job and go start a service that does this?
I think you can maybe join forces with a startup in Germany that were unlimited, and they tried that, but then they pivoted. So I don't know why it didn't work, but I don't have insights on why it didn't work. No, I think you see this in various forms. Like I think various of the larger players are sort of experimenting with these things. I think Coinbase Wallet included, but we'll happily take your feedback why you haven't seen it.
Yeah, I mean, I think it's potentially very exciting. There's a huge opportunity there, but you're right. It's super immature and relatively early. I think we had another question here. We had 2 questions here in the audience. So we'll start with the gentleman in the London Underground sweatshirt.
Sorry, I forgot my questions. So right now, from a consumer point of view, crypto is still much less regulated in EU versus UK. I'm going to give an example of 2 countries I know well, Poland and UK. In Poland, you can trade crypto with no KYC to fiat in multiple ways, still, even in person or online. Coinbase doesn't report all users to Polish tax office. You don't have financial promotions regulation. So there's a huge gap between UK and Poland. Do you think that due to MiCA it's going to change soon? Or because I like the gap actually. That's why it's important question to me. Second question, you said that DeFi is small. Like if you go to DeFi Llama today, it says that $86 billion locked in DeFi. And I know that DeFi Llama is trying to avoid like looping, so the same money is counted twice. Do you think it's small? Thank you.
Very good questions. So I would say so maybe less so with MiCA. Like if you sort of make a comparison between MiCA and the UK, I think it's less of a case that we should say, MiCA is going to bring the UK closer to the UK, or UK is going to be closer to MiCA, because the UK will or is thinking about introducing a second part of the Financial Services and Markets Bill. And that would sort of bring it closer to MiCA. And I think MiCA only, like with the stable coins coming in the summertime, and then the rest of MiCA sort of coming in the wintertime, I think MiCA is not even introduced, right? So I think what you're speaking about is probably a longer process, right? Like so probably a 6 months, 12 months, 18 months kind of time frame that you're talking about, right? That will be the timeline on which we will see this getting closer to each other, I would say is the first question. The second question, I would say, well, that is a relative question, right? When you say what is big, what is small. Because I think if you compare this to traditional financial institutions, institutional markets, I think it's much, much smaller, right? I think even if you compare this, the 86 that you just quoted, even if you just compare this crypto market cap, which I think sort of around 2.5 trillion at the moment, is still small.
Excellent. Thank you. Another question here.
Interesting discussion. At one point you were talking about the tokenization of real-world assets. So a lot of exchanges get very nervous when they talk about the tokenization of shares and equities and these sorts of things. So which types of real-world assets do you think will be the ones that first get embraced by organizations such as yourselves, given so many of those are in regulated markets, be it housing, be it fixed income, etc. So sort of bring that to life for us, please.
Yeah, I'm going to give you a sort of my perspective on what's going to happen in the industry, not necessarily at Coinbase, but in the industry. You know, it's a fascinating question, right? I think, you know, back in 16, 17, we were like always thinking like, when I first heard tokenization of real world, as we were speaking about, fantastic, we're going to have all these Van Goghs on the blockchain, right? And I think that was sort of the idea at the time, right? But I think what we've seen and what we will, my expectation, what we'll continue to see is actually quite the inverse. It will come from the most liquid asset classes, right? Because what we've seen is actually stable coins, so kind of dollars, right, on the blockchain. And I think now the next thing that we're seeing at the moment is money market funds. So that's another very liquid form of assets, right? So actually my expectation is we're going to see it come from the liquid side and then move towards the illiquid side.
Excellent. Another question from back here. And we'll take 2 more questions and then we will go to our next panel. So no pressure, but this needs to be amazing, like shocking, genius insights.
So do you see, for example, with ETFs and ETNs sort of coming into the place, do you see like less market for spot and a move towards like crypto derivatives in the Europe and the UK space? Because it is expected to kind of hurt the spot trading a little bit. So what do you see in the next couple of years in derivatives? How fast the main exchanges will go over there?
Yeah, interesting. Actually, our research kind of shows the opposite. So it's actually showing, like, because you just mentioned, like, it could hurt the spot markets. Actually, we don't see this at all. Like, it seems to be unlocking almost like an entirely new type of investor or an investor that previously had not just been going onto exchanges or buying spot. So we see this as very complementary.
Excellent. And we've got time for one more question.
Thank you. You mentioned a case for stable coins for the cross-border transfers and remittances. And when we did research in Cambridge, we found that one of the weakest points is on-ramp of ramp infrastructure. It costs $0 for users on Coinbase to do that. But especially if we talk about DEXs, it's not the case. What is your view on that particular puzzle of the whole picture, and what are the challenges to scalability do you see? Thank you.
Yeah, I think you hit the nail on the head. I think this is one of the most crucial pieces that we still have to solve is the on-ramp offering. I think, once people are sort of on stable coins or are on the blockchain or blockchain assets, then, the transfer of the money is kind of almost seamless, right? And it's kind of almost instantaneous, seamless, very little costs. Sort of like at Coinbase, we're always talking about this 1 cent, 1 second transfer, right? Like that's kind of what we're working on at the moment. But I agree with you. The key pain point or the key challenge to solve will be the on and off ramps.
Excellent. So before I wrap up here, Dan, I want to give you something that I always wish I got at home, which is I want to give you the opportunity for the last word. Like if there's one thing that you could have, if there's one message you would leave everybody thinking about, what would it be?
I think I got to get these T-shirts, because I get coming here. Exactly.
Very good. Dan, thank you so much for making time for us. Thank you for joining us. This has been incredibly insightful.
Thank you, Paul.